Okay, peeps, welcome back. So today we're going to be talking about LTCN BCHG HZEN and ETCG, and we're also going to go over how there may actually be a market reversal taking place right now as we speak. So with that being said, let's get it. So the first thing that I would like to go over with you guys is, of course, the LTCN chart. So we did say before that we think there is a possibility that LTCN could come back down to the support zone. So support's somewhere between 23 to about 26 and a half bucks. Why is that? Well, simply put, there's a few different reasons. So number one, we'll show you guys this in a minute, but LTCN was getting outside of the Bollinger Bands. So you also have this control bar here. Until we get above that, I would say that there could be, basically we're looking for the bears to get squeezed up here to send the price higher up to the next level of 100 to about $135, as you guys can see here. We zoom out here, you guys can see the price. For those of you that are new to our channel, just go ahead and hit the subscribe button and the all bell notifications so that way you guys can stay up to date on this content if you want to stay up to date with this, and also follow us on X. The link to that is on our channel, so go check it out. But anyways, you guys can see here this big resistance box. It's a very important box. There was a sell-off here, and then of course you have this massive green candle. Anytime there's big green candles, that either indicates FOMO or massive selling. So a lot of volume taking place there. It did bounce here mid-cycle. Very important zone. So let's go ahead and pull off the EMA here. We'll take a look at the Bollinger Bands. Yeah, that is actually not the indicator I wanted, so let me get rid of that. We'll try this again. So Bollinger Bands. Okay, so as you guys can see on the Bollinger Bands, we clearly got pretty heavily outside of it, and we got outside of it for a long period of time. This was the first week that it happened back here in early March, and we have been outside of it basically until pretty much early April, so an entire month out of the Bollinger Bands. One thing that you guys need to understand about this indicator is generally when price gets outside of it, that is a pretty good time to get out. And when price gets underneath the bottom of it, that's a pretty good time to get in, because that indicates that basically the Bollinger Bands are saying, hey, this thing's probably going to pull back within the bands or bounce back into the bands, depending on which side of the indicator it's on. So we'll also take a look at that on BCHG real quick and get back into LTCN. So you can see it was even more extreme on BCHG. Now we're back within the bands. Now it could theoretically keep going up as the bands expand, or it could come down lower. So we'll go ahead and get rid of this real quick. Pull up the EMA again, and then get back into the charts. So we generally have this as the red color, because if it gets below that on a bullish move, that's generally obviously a bearish sign, and we know red is associated with bearishness or selling. And if it bounces below it and sells off, obviously that's a sell signal. So there's a reason why we picked that color. We didn't just pick it randomly. But anyways, so I do believe that LTCN will come back into this box somewhere. Now, whether it bounces out of the box or not, that remains to be seen. It's possible it could bounce off of these wick highs here at 19. It could come back down to the zone which is where the bottom EMA is, on also the breakout point. That's between $13 to $15, although I'd say those lower two scenarios are much less likely, but we'll just have to wait and see. So if we take the measured move, let's say you get in at 25 bucks and you want to ride it all the way back up to the wick high, you're looking at about 116%. We got our shares like all the way down here, actually lower, or no, roughly around this zone down here. So, we're still good as far as that move's concerned. So that's LTCN. BCHG, we did have a full-on rejection out of this zone. So tried to close above it, couldn't close above it. And then the wick, obviously you guys can see here, is a selling pressure coming in from the bears. And then the full-on sell candle took place the following week. And the histogram is moving down, so that indicates a weakness in the bullish trend and potentially a pickup in the bearish trend. We don't know yet, but current support is between 1020 to 1260, and resistance still 18 to about 20 bucks. And then, of course, the wick high is at $24. So if we look back on the chart, you guys can see that I don't really see a real particular reason why that wick high got touched other than maybe this one back here, but it seems kind of like an obscure place to sell. But you have to understand smart money is very tricky with the way that they do things. We've learned this in day trading that always suspect the level that you least expect to be a selling or buying point to actually play out. Of course, that's just a euphemism. There's no guarantee, but as you guys can see, there's a lot of wicks that happened around that level. So the drop so far on this move from top to bottom has been pretty extreme. I would say that it could maybe go down a little bit lower, maybe another 10-15%, then we see a bounce or something like that. So that could put it roughly around the bottom of this support. Now, if you just wanted to go ahead and buy in now, which is entirely up to you, the move back up to the previous high would be about 87%. If you manage to get in, let's just say at the middle of the zone, because nobody can ever time the top or the bottom perfectly. If you can, hey, congrats. we should definitely consider working together, because I would love to learn some of your secrets. But anyways, 104% move to the upside. So HZEN, this one has had a confirmed basically sell-off. So it tried to break out, retest. Looks like we had a fake out candle right here, and then boom, straight to the downside. So at this point, it's looking likely it's going to bounce somewhere between probably 375 to 420, somewhere in there. And then, of course, your resistance is $6.90 to $8. And the wick high is all the way up there at 1050. So we had a bull flag in here, but clearly the pattern did not play out. That's a low probability scenario, but it does happen sometimes. So to get in now to the current support is about 19 to about 38%. And following support is about 96 to 112% to get up. Well, yeah, okay, that pattern is no longer actually relevant. So roughly about 110% move on that. Let's get rid of this. So however, if you wanted to wait for this zone down here, of course, it would be a much bigger move. You could always DCA down if you're not sure. It is possible it may not hit that zone. That's one of the reasons why we do DCA down, because sometimes it doesn't go into the spot that we think it's going to. So about 70 to 102% on this move. And then, of course, you have about 182% to 206% up to the next zone. So ETCG, this one has some very, very strong support here. As you guys can see, the trend line, the channel, the candle tops, the EMAs, and the support zones. So this whole area of confluence here is between roughly about 13.10 to about 16 bucks. And then resistance is 17.70 to about $20. So if you chose to get in now, which is, of course, your choice, you'd be looking at about 18% to the upside, and roughly about 33% move to get up to that resistance. A couple things to keep in mind with this is an oscillator to Ethereum. So when Ethereum breaks all-time highs, this thing probably is going to go up with it. There is also the possibility of a spot Ether ETF next month. So if that gets approved, then the discounts on ETH will probably be taken off, which probably means that the price of ETH is going to go up, which means that ETCG is pretty much going to go up with it. Of course, that's not a guarantee. I mean, there's no guarantee that just because a spot Ether ETF is approved that, Grayscale is necessarily going to convert theirs to a spot Ether ETF. It could happen, but, we saw that Grayscale's been doing a lot of selling out of GBTC, so it doesn't necessarily mean it's a good thing. Hopefully that doesn't happen. So GXLM, again, another fake out, sell off to the downside. I would say that, probably around this $40 level is a good price to start getting in. This one's a little bit more tricky. I would say probably somewhere between about 30 to 40 bucks is a good point. So the top of that candle there to roughly about where this wick low is. So you have resistance up here at 52 to about 58, and the following resistance at 74 to about, I can't actually see that, but that's roughly about 95 bucks. So we'll just say you get roughly about halfway in between those prices. So you'd be looking at about 52 to 61%, and about 104% to roughly about 165% move. So ETH, this one clearly is in sell-off mode, as you guys can see, very similar to the other charts. And it's still within that handle, but there's no guarantees that handle is going to hold. It looks like it's actually continuously testing the bottom. More times it tests a particular zone, the more likely it is to break. That's how it goes in trading. So if it goes to the next zone, that's about 17 and a quarter to 18 bucks. And the current resistance is 25 to about $29. So we'll go ahead and measure that. You guys are looking at roughly about 42 to 68%. And then to get back up to the highs here, about 103%. So Zcash, this one is getting pretty close to the buy zone. It did have obviously it tried to break out, didn't break out, and then it basically confirmed that it was not ready to break out yet by the sell-off. So current support is around 440 to 508. Current resistance is about 740 to about $8. So we do the measurement on that. Assuming you get in somewhere in this green box, you'd be looking at about 54 to 70%. And then as much as 115 to get back up to that wick high. So GSOL, this thing has confirmed bearish. I'll reiterate one more time. I think it likely stops somewhere between 175 to about 200 bucks. I think that is a likely area. As you guys can see, this massive wick here indicated serious buying pressure. That's also where the top of these candles are. And the high up here is 580 bucks. The lower zone is roughly about $90, just in case you guys want to know. So assuming you want to wait for that drop down there, you'd be looking at about 208% gain. Wherever you choose to get in between the zone and the current price, that's entirely up to you. So Mana, this one has come down quite a bit. So we did say that we think it's probably going to stop somewhere between, I would say, maybe 20 to about 26. So we are at that 26 level. If I was going to buy this now, this is the part where I would start DCAing in. That's just me. But we'll just say that if you wanted to get in now, to the top is about 158%. If you wanted to get in lower, let's say at the zone, you'd be looking at roughly about 250%. So GBAT, this one has also confirmed bearish out of the triangle pattern. I am going to stick with my story on this one and say that I think it probably stops somewhere around $9, $10, somewhere in there, just simply because that's where the first big candle landed after the breakout. Was roughly about that top, and that's where also those candle tops are. And the wick right here is pretty close to that area, so it all kind of lines up together. But for the measured move on that one, you'd be looking at roughly about 220%. So G-Link, this one has also confirmed bearish, and I would say likely it's probably going to come back down to the zone, so somewhere between 68 to about 84 bucks. So if you wanted to get in at that area and ride it all the way to the top, it'd be about 186%. The zone below that is about 40-ish to about 45 bucks. So PhilG, this one did create a lower low on the weekly. Although it is not Friday yet, so this is not actually a full week's candle, but so far it does look kind of bearish. So I would once again say that this is going to stop probably at the earliest 120 bucks, maybe at the latest somewhere down here at about 67. So it's a pretty wide range, but this is also very hard to read. So let's say you started averaging in at like maybe, I don't know, 90 bucks or something. To get the move all the way to the top here would be a pretty large move. It would be, let me remeasure this for you guys. So it would be roughly about 337%. And again, keep in mind, these dumps, I'm not going to say that they're not permanent. There's a chance we could be at the end of the bull market cycle for crypto, but it's never happened before the halving. As you guys know, the halving is this week. We have never seen a bull market cycle top before the halving, and I highly doubt we're going to see one now. I would say more than likely we're probably just getting a pullback into the halving, maybe even after the halving, partially because that's what normally happens with Bitcoin and crypto during this time of the cycle. But on top of that, we also have some kind of bearish looking macroeconomics going on. So GLIV, this one is still within the triangle. It has not broken bullish or bearish. I would say once again, likely this thing's probably going to stop somewhere between 26 to 28 bucks. Don't quote me on that. There's no guarantees. But if you decided to get in around that area, you'd be looking at about 205%. So these are the grayscale trusts. Now let's go over a few other things real quick before we get close up this video. So on the Fear and Greed Index, this applies to the stock markets, not crypto. Okay, this is for stocks or ETFs, stuff like that. We went from last month being at a 74 to this month being at a 41. So you know what they say: buy the fear, sell the greed. That's not financial advice. I'm not telling you guys to do that. I'm just saying that's common knowledge in the finance space. So do understand that this is in the fear side of the Fear and Greed Index for stocks. Now, as for crypto, this thing should have changed. Let me go ahead and actually refresh this. So yeah, so here we got the change. You guys can see that we went from extreme greed last week and last month, now only down to greed, which means this thing could come down a little bit more before bouncing back up to the more bullish side. Of course, there's no guarantee. It could just go straight back into extreme greed. We don't know yet. But I suspect that as long as this issue with Israel and Iran continues, we're probably going to see a little bit more bearishness. As you guys can see on Bitcoin, we did break bearish out of that triangle, are still kind of holding above these wick lows here at 61,000. So we'll have to see how that plays out. We have two macro trend lines here. So this first one is at 51,000. Second one is down here at the current prices about 35,000. I don't think it goes below these trend lines. Simply because, again, the halving hasn't happened yet. We're getting a pullback into the halving. That's normal for the crypto cycles. So there is another thing I wanted to point out to you guys. We did go over this before, but this is a rare occurrence. We have had a MACD death cross on, I believe, all of the indices. We'll get into that in a minute. But as you guys can see, every single time we have had one of these, it has led to a correction and or a bear market in stocks. I'm not saying this to scare you guys. It just is what it is. So you can see we had the sell-off here. Of course, we had our death cross like somewhere around here or here. Yeah, clearly it's right here. So you guys can see shortly after that, there was a dump. Excuse me. And then looks like we had another one here. So markets were going up. We had this death cross, and shortly before the death cross, it dumped. So we had one occurrence in, if I can find it, one occurrence in 2021. Looks like we had technically two occurrences in 2022. So I guess you could say we had two in 2022. And then we had only one. Well, we kind of had this one right here. Hold on, let me actually zoom out with this. Okay, yeah, so there was no death cross in my bad. I'm looking at the RSI. There was only one death cross on the MACD in 2022. That was this one right here, which led to a dump. And then this MACD death cross obviously was the dump we saw last year. We were talking about yield max a lot at that time. We still are, just not as much. And currently we have one now. Again, as you guys can see, it has broken out of this channel. And we have 3 days to recover the channel. So very similar on the NASDAQ, MACD death cross. It's trying to break out of that channel. This one's actually a rising wedge instead of a channel, but as you guys can see, we also have a death cross here. And same thing with the Dow Jones, death cross, break out of the channel or rising wedge, whatever you want to call it. So likely these green zones are where it's going to bounce. So I suspect the likely scenario here is some kind of correction, but not a bear market. So perhaps over the next 2, 3, 4 months, we see down and or sideways for crypto. And then towards the end of the year, we see the typical end of halving year start to the bull market. So that's kind of the theory that's playing out in my mind right now. But anyways, this is our video on LTCN BCHG HZEN and ETCG. Hope you all enjoyed this content. Please like, comment, and subscribe, and we will see y'all later. Peace.